stocks.
You think it's going to slow down? Marc Faber is back with us, by the way, or in, and we've connected that phone line from Bangkok. He's on the line right now. What about that idea, Mark, of the economy slowing down dramatically, and just what you think of this market reaction to the day after a U.S. presidential election?
Well, actually, I'm not surprised the market is selling off because technically the market was weak already for a couple of months. And we are in a downtrend, and Mr. Obama's economic policies are obviously not very good for an economic expansion. And I think businesses, the small businessmen and even medium-sized businesses will be very reluctant to hire people given Obamacare.
Okay. One of the things I think is interesting today, I got to say the market's down a little. I didn't know what was going to happen to the market, but the reason I would say maybe we'd see surprise that we're down 300 points on the Dow and all these markets are selling off like crazy is because the Obama victory shouldn't necessarily be a surprise to investors. Wouldn't you think some of this would have been priced in? I mean, the polls all pointed to him winning, and he did, but we're still seeing a pretty big reaction in financial markets. Does that tell you anything about the future?
Well, actually, I tell you, I think among people who are investors, the election victory or re-election victory of Mr. Obama was actually a surprise because I have so many friends who are Republicans and who are investors. They were betting on Mr. Romney. So I think for some people it is actually a surprise. And I think what people are also concerned about are increase in capital gains taxes.
Right.
So they're selling shares ahead of the implementation of these taxes.
It's interesting. Even the betting markets, in trade and everything, 60-70% chance of an Obama victory. But you're not the first person. Our first guest today said, too, that there was a portion of the investment community that still was at least hoping, maybe, even though the numbers showed something different, that Romney would pull it out. He didn't. Obama, as the polls showed, won. So that brings us to the year-end situation. No matter who is going to be president, you got to deal with this fiscal cliff. Because it's Obama, are you more worried that maybe we go over the cliff? And what does that mean, then, in turn, for financial markets?
Well, in principle, I think that actually Mr. Obama is not that bad for reducing the fiscal deficit and continuous monetization, and that's why Treasury bonds are rallying.
Right.
But as I said, he's not good for business, and so stocks are selling off because the stock market is expecting a hard time for corporate profit and essentially economic weakness, which is reflected in a strong bond market and weak stocks.
Right, which was what taken.
And as I said before,
right.
I think when I was interviewed 2 months ago, I think from the peak, the market will drop at least 20%.
20%. Wow. Marc Faber, one of the best.
I think we'll revisit the lows of June,
wow.
The 1266 on the S&P.
Wow. Okay. Revisiting the low. Marc Faber, certainly not optimistic today at all, but one of the best-known global investors out there calling in today from Bangkok. Thank you, sir, and we'll stay on top of this market sell-off.
We sure will. Stay with us. Markets Now. More ahead.